times we had. I see it now, I see it now. Real love, now I break through to show to you that I'm more good than I am bad. I work it out, I work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show. Afraid to say real love. Now I see you when I'll make it through to find the life that we once had. I see it now, I feel it now. Real love, now I see you, yeah, you know I do, to make it through the times we had. I see it now, I see it now. Now I break through to show to you that I'm more good than I am bad. I work it out, I work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show.
Watching the ocean with you, baby, up with a slow motion crew. And we up in our cloudlands when people change, but not us. And we just chillin', kicking it, kissed by the sun. Could be soaked to the skin in the monsoon. I know she got the good vibes when seasons change, but we're the same. Even if I lost all my money, the zero runs deep, honey. And I don't need to speak a single word, 'cause you got me holding, holding. Even if my jokes aren't funny, my tongue tied up on it. And I don't need to speak a single word, 'cause you got me holding, holding. 'Cause you got me holding, holding. And I'll be running, possessed by a lone, low voodoo. Fired up like a wolf on the full moon. And we're stuck in a la-la land. The tides will turn without us. And I'll be killing time like I might be a cartoon. Take it in real life like haiku. I know we got the good vibes when pieces fall right into place. Even if I lost all my money, the zero runs deep, honey. And I don't need to speak a single word, 'cause you got me holding.
What's up, guys? Good afternoon. Exciting morning. Exciting morning. Yeah. Just got out of the shower, so I'm a little slick back, looking like, your typical, I guess, I don't know, greasy Italian dude from New York. Just kidding. Okay, what's going on? It is 12:05 p.m. New York time. All right, it is Monday, So exciting things. Yeah, I have to figure out what to do now that I have long hair. Like, I don't know, it's weird. My wife asked me if she could braid my hair. So you can't really tell, but in the back, I guess because of the black and the green screen, you can see the chair, but I have a little bun. And I know it's a little bun, but I'm proud of it because I used to always have, you know, your sort of military buzz cut for the longest time. Just so easy to not have hair. But yeah, no one wants to talk about hair right now. Good morning, good afternoon, good evening. We got a bunch of people in here. I think the mic is good. That would be really shitty if the mic wasn't working after I just went through that little nonsense about the hair. So we have a good amount of viewers in here, but as always, want to get cornrows. I don't think so. As always, maybe you never know. As always, we want to get the we want to get the likes up to parity, or we want to have a tighter parity between viewers and likes. So if you guys can go ahead and hit that like button. You know I hate to say that, but it is what it is. What we want to do is be prioritized. You know, we talk about this all the time. We want to be more present on YouTube, and you know how YouTube will distinguish those that are worth putting up front from those that are not. It's based on the likes that you have. So that's cool, right? Semi-democratic process where, you know, if you hit the like button, it's like you're casting a vote. So we're going to take a minute or two to let everyone settle in, and then we will get it started. And if you can't see, if you're new to the stream, welcome. On behalf of my partner, my name is Kendrick Clark. First of all, my name is not Kendrick Clark. My name is Ryan. Kendrick Clark. For those of you that are familiar with Kendrick Clark, where that's from, well, originally before BlockRoots, that was the name of the boutique that I operated. And before that, and rather currently, it is the name of my favorite horse. So Cantering is not his name. Clark is his name, but we call him Cantering Clark. So we live in New York, and my wife is a huge equestrian. I guess that makes me an equestrian as well, though she spends all the time with them. So we have a bunch of horses up here, and it looks like we'll be adding more. So I'm dreading that because that just means more responsibility. I kid, because it's the fact that my wife is always with the horses that allows me to spend as much time as I do doing this. You know, there's 168 hours in the week, and I don't want to say that I'm retired, but I'm in a position in my life where, you know, I haven't worked for anyone for a really long time. You know, sitting well, and you know, I have a lot of free time, and if it's not the summer, even though I didn't get that many rounds in this morning, I spent a lot of that time golfing, my free time that I fit in outside of trading. And the fact that my wife is outside, you know, in the barn almost 8 to 10 hours a day, as crazy as that is, horses need a lot of care. It allows me to have all this time to do this and to, you know, play some video games as an adult. And this is something that I just got because I've been talking about how I started playing video games again during quarantine. And this controller, I'm just wrecking people all day with these paddles. Was a big video game player back in the day, and I joke around. I talk about how one of a few of the prop shops in New York, one of the questions for their interview process for their traders is, do you like to play video games? And I'm sure you could draw parallels between why that would be, why that would maybe filter out potential good candidates for traders, because people are, you know, focused on one particular thing, mastering a game, which is essentially what trading, in my opinion, is. A lot of what the trading that I do on the lower time frames is like a game. So yeah. Anyway, grateful for my wife, but she wants to get another horse. It kind of needs to get another horse. I haven't gotten into that yet. She goes on these fake fox hunts. So at these local estates on Long Island, they have these fake fox hunts. There's like a club. So it's not a real fox hunt. So people bugged out on Twitter once when I said that. They drag a scent. So it's like a drag scent. It's a fake, you know, piss scent from a fox. And they have hounds. And they have horses, and it's just a trail ride for all these people that have horses. So one of our horses that is her primary trail horse, Journey, he's not lame now. I don't know what it is. He got freaked out on the trailer once on the way there and hasn't been able to be trailered since. So, you know, what that means, you know, we can't drive him anywhere. which is fine because he could just be, retired essentially on the property. But she wants a horse for the fake fox hunts. So it looks like we'll be getting another one. And I'll let you guys know what the name of that one is. I said I would name it Ave, but I don't think that that's going to be a reality. I don't think I'm going to be allowed to. So, all right. So on behalf of myself, my partner Josh Rager, just want to thank you for tuning into the BlockRoots live stream. What we want to do is be a source of non-sensational trading and crypto market education, insights, analysis, all of those good descriptive words. I'm pretty much no frills. So it is, what you see is what you get. A lot of the times I'm pretty off the cuff. I don't follow script. I've been trading for 14 years now. And I tell it how it is. We like to have fun, and I think that that's what will make this YouTube channel unique. I think there's a lot of other phenomenal people that need to get their butts onto YouTube from crypto Twitter and take over. One of the people this morning that shouted us out is Young Talopa, another one who is a light in the darkness. That's what we'll call it, a light in the darkness. Him. And Crypto Cred and Don Alt, Technical Roundup. There's a lot of us can have fun, right? There's plenty of room for all of us because right now the area is just monopolized by. We won't talk bad about them, but there's a lot of ridiculousness in the space. It's a lot of snake oil. Okay, so let's see. Do we have the likes up? Let's get the likes up, and then let's go get it started. If you can't already tell. Should be down here. I made my head a little bit bigger so that it wasn't a square, but the subscribe button is right down there. So if you want to go ahead and subscribe to the channel, we do giveaways all the time. I feel like we've given away a ton of Bitcoin in the last few months, and it's going to be funny because if we do get that Citibank, so let's just look at something real quick. So let's get the chat out of the way. I'm going to say hi to everybody. Let me say hi to everybody first. Sweet Canary, what's going on? Ash, Ross, Luna, Pascal, what's going on, Pascal? Pascal, that intro video was awesome, man. So on the community page, we have an intro section for everyone to kind of tell us who they are, what their goals are. This is on the BlockRoots platform, and Pascal put together an awesome video. Awesome stuff. Great to get to know you guys. Sigmar, Rob, LP, Dave, what's going on, man? Crypto Life. New Yorker, what's going on? John Brunson, Keld, Abby, Kenny, Michael, Jake, Cornholio. It's cool. Getting to know all you guys now. Scaramucci. Mucci's jumping into digital assets. Yes, he is. Yes, Cold War. No, I don't play Cold War. I play Warzone. I play singles. I play singles a lot because I was playing my brother early on because when he was working from home, and I've always worked from home pretty much for the last few years. During the quarantine, it was like, all right, let's link up. And I bought my brother an Xbox to make him play. And I'm gonna send him a controller like this too, because his KD is like a 2, and my KD, not to go on a tangent, but my KD in Warzone is all types of fucked up because in the beginning, I was just getting out of matches after I'd get killed. I was like, fuck this, I'm done. I restart, and my KD got totally lopsided because of that. If you think of it now, even if I have outlier matches, it's not gonna fix that average. So I'm averaging like 7 to 10 kills a match on solos. I won 2 out of my last 10 matches, and that's thanks to this controller. Can't say enough about it. But we're not here to talk about video games. Okay, no, not breeding them. Nope, not breeding them. All right. Fuzzy, what's going on? Mark. All right, cool. So Citibank. So let's go over the Citibank news real quick because everyone is pumped, right? Everyone is pumped. And Priapus just shared this. What a funny name, Priapus. I think it's the Greek god of fertility. Priapus, the legend of the massive endowment. Okay, so Bitcoin, 21st Century Gold. This was put out by Citibank, okay, which is super bullish. It's sort of like this becoming a self-fulfilling prophecy, right? This is fantastic. We're seeing that this is not just a retail push, and it's kind of insane. That being said, okay, the guy who wrote this is known for pretty lofty price targets. So for gold and silver, I think he had one of like 4,000 and 3,000. So just to point that out, this guy's got pretty lofty targets. But you know, if what they're saying is going to come true with the USD losing 20% of its purchasing power, 20% of its value within the next year, that is crazy. All right, so something like this, you know, it's there are times when something is, you know, before its time, after its time, and just right on time. And it looks like Bitcoin is just, it's just, I hate to say, you know, I don't like to say this because I don't like to say that this is perfect. Because if you think about it, this is all great for us, you know, for those of us that are involved. But it's actually really sad when you think about the fact that what is making this is sort of the, it's like everything is kind of falling apart, you know, which is, you know, that's kind of depressing when you think about that. So honestly, where I am, you know, I love the holidays. I love being able to see family. I love getting together with friends. I loved that feeling of before. Things are never going to change, right? They change, and then we adapt and we move on. Survival of the fittest, right? Not to be morose or anything, but you know, do I need $150,000 Bitcoin? No. Do I think that's awesome? Yeah, that's awesome. Do I need a $300,000 Bitcoin? No. Would I rather have a reasonably high Bitcoin as a risk-on asset performing in any kind of risk-on environment, and everyone have what they need, you know? Yeah, I definitely would. I wouldn't even probably. I don't even know why I was going to say probably. I'd rather have everyone healthy and happy and, you know, things back to a better state of things. Because while this is all happening, we're having a great time. But other people are not having a great time. So it's always important to put that stuff in perspective. Not to get deep or anything. But yeah, so 21st century gold. Right? The institutions are coming. This is pretty awesome. Next level stuff. Okay, let's get off the feed. Let's look at some charts. A few things with regard to Bitcoin. We cleaned up the high. All right, one of the things I was talking about in the short term. So long term, you know, we always hash over the long term, the higher time frame chart in the beginning. Excuse me, I'm drinking Perrier with lime juice and pineapple. It's making me burp. We always hash over the higher time frame in the beginning. This, as I said, I think I said this recently. I might have said this in the newsletter. You know, we're closer to an area of resistance contextually than we are to higher time frame support. So this is something to keep in mind, right? At some point, we're going to have a pullback. The problem is, you know, if you're sitting on the sideline, it's really hard to overcome that complete fear right now that you're going to get left behind. All right. So you could hear things like me say, we're going to have a pullback. You know, let's look at all the things that might indicate that we're more overextended, because the idea of overextended is relative, because this thing can go on a tear, and what we think is overextended could be just a, you know, fraction of what it ends up going on to do. So we always have to look at things relative to historically where we've been, right? So if we look at something like 20-period moving average, good line in the sand, good barometer. All right, we are extended from it. Okay, pretty extended. This is the upside of the almost 1.5 to 2 standard deviations above the 20-period average. You know, I know that, but if you want to see that, you can go to Bollinger Bands. So we're extended to the upside. Bull market, this can maintain for a really long time. So taking that as, you know, you see you're hovering against that, you start paying attention. It doesn't mean you start changing positions. You know, again, this can continue on for a really long time. So that is your Bollinger Band. 20-period is just the center, right? Then let's look at, you know, volatility stop. You know, this is a multiple of ATR, pretty extended from that. That's a pretty good tool to use. We're extended from that on the weekly, on the daily, quite extended from the 20-period on the weekly. This is a good area that we've come back to in the past. But the thing about that is, yes, we have, you know, people will reference this. We've come back to it in the past and talked about this in the newsletter. Yes, we do. We do come in contact with it at some point, but that doesn't mean that you have to drop down to it. A moving average is just an arithmetic mean, so it's just an average of that period. So the average of the last 20 candles, okay, and this is rolling. So all that has to happen for the moving average to catch up is for price to just move sideways enough. right? So this 20 period moving average on the weekly ends up catching up if price just moves sideways. So that might be your retest right there. But right now, it's pretty extended from it. If we're looking at the weekly candles, you know, 1, 2, 3, 4, 5, 6, 7 weekly candles in the green. Historically speaking, it all comes down to what period you're going to reference. Are you going to reference the last few months, or are you going to reference, you know, previous bull markets? I think that in the last 3 months, in the last 2 months, you're in a data set that is, I guess, better to use than historical data. Because if we just look at, you know, how things change if you're going to look at more recent data, and I think you have to look at more recent data. Let me log into this. Sign out. What's going on? Okay, this is my GVol account. If we look at realized vol, for example, how things have changed over, we'll look at just the window. So let's look at, go all the way back to year, right? You could see that in terms of the year, right, Saturdays were, if you're looking historically, very low realized volatility. More recently, if we're looking at the last month, this begins to shift, right? Realized volatility increasing. This is just showing that, you know, in terms of more recent activity, things have changed in context with the larger change within structure. Now, that doesn't, what I just pulled up in GVol is not something that I was, you know, we're going to get into realized vol, but what I'm talking about is that the look back that I want to be paying attention to is, if we're considering this a major contextual change moving on into a larger bull market, I think we have to go back and look back at these previous legs where we were leaving a major structure and going on to continue in the same fashion. It looks like we are right now. So what that means is, you know, if we're looking at 7 weekly candles in a row and you're thinking, well, in this time period, that's a lot of 7 weekly candles. You know, typically at some point we think that we'd be closer to the end than to the beginning. Well, this context is completely different. You know, we've actually just changed the context of the structure, had a major contextual change more recently. So I think you got to go back to periods where major contextual change occurred, because norms are going to be slightly different then. Not even slightly, more likely very different, right? Talking about a massive change in structure. And people are still focused on this high, of course. We are very close to that, right? We're closer to that than we are to higher time frame support. So in terms of risk reward, you could say that from a technical standpoint, well, I don't think that this is going to offer too much resistance at this point. You know, if you're looking at, say you're scalping in the middle of nowhere, this is a horrible area to do it because it's hard to define a position. Excuse me, let me rephrase that. This is a phenomenal area to scalp. But if we were talking about this being a chart that you're scalping right now, and this is a lower time frame chart, you're closer to resistance than you are to support, right? This is currently an in-process breakout to the upside, which is the eventual target up here. So there are a lot of things right now that are showing us that we're overextended. But by what measure? By recent measure, right? Previous bull markets. They are, in Bitcoin's case, they are what would normally fall under the category of being outliers to begin with, right? The moves are all, you know, it's similar to like how in traditional markets, things like, let's say, Black-Scholes. That is like a, you know, perfect distribution, a, you know, perfect ideas for what volatility should be. Things don't occur like that, right? That's not how reality is. You know, we say analysts will talk about things like, oh, you know, 5 to 10 standard deviation event. It's supposed to only happen once every trillion years. Well, guess what? That's because we have this very, you know, it's a very, the theory that we have about standard deviations, the theory that we have about volatility and our interpretation of what to expect is, I think from the start, hamstrung, right? There are you know, massive events actually happen more frequently than we anticipate if we're looking at those basic models. So I think that we have to look at Bitcoin as the statistical anomaly, this statistical outlier, and anticipate that what has been right now is probably going to continue. Okay. So if we're looking at some of the more recent things that would judge or act as a barometer to whether or not this is, you know, well overextended, we have to be careful, because we are in a period where overextension is something that you should not only anticipate but expect. So hopefully that was kind of clear, because I got a little bit, you know how I talk, I get into fucking ellipses, excuse me. All right, so, you know, we're well extended from that, but I don't think that this is, you know, what we're looking at in the short term. So let's go down to the shorter term structure, okay? there is this on local, in terms of local price action last month, right? This is now almost, it's getting to the point of parabolic / vertical, right? So I think that we're going to have a big kickback at some point, whether that's at 18.5, whether that's at 20K. I think we're going to get that big kickback. I don't think that it's going to last long, though. I think it's going to be very short-lived. And again, this is a moment where I talk about how, hey, I wish I was just not at the chart for that week. Half the time. So when it comes to, I can't say this with Bitcoin because I've played it very well, but when it comes to some of the alts that I, for example, like not my forte, trading alts as frequently as I am trading now, it's, I go from focusing on Bitcoin to, focusing on Bitcoin primarily, and you get a feel for it. It's like a dance partner, right? And then alts are completely different, all right? They're much stronger in terms of being narrative driven. They're momentum assets, right? Bitcoin's a momentum asset as well, but they definitely respond differently, okay? They behave differently. And you're also referring to alts as this entire universe of alts, but each alt is obviously different from the other, right? There's these micro consolidations where you have these 4 DeFi alts that are correlated, and these other alts that are correlated, and these ones that are inversely correlated to BTC, these ones that are positively correlated to BTC. So there's all this nuance, right? All these sort of idiosyncratic relationships. With alts, what I found is the times when I got out of positions after there was like a big kickback, they just continue to run, and you wish I wasn't around at the chart at that point, because I wouldn't have sold, right? I wouldn't have had a chance to sell. So with Bitcoin, I think we're ultimately going to come into a point where we do have a major kickback. But the question is, right now, what a lot of people are feeling, and I imagine if you're newer to this right now, you're feeling this. It's sort of like as Bitcoin is moving up and you're seeing all this positive development, you're getting that FOMO feeling, right? The best way I could describe that FOMO is your thought process starts really racing, okay? You start really thinking that there's, time is of the essence and you only have a little bit to board the ship. And what I would compare that to is, have you ever been to, Disney World, Six Flags, a theme park with a roller coaster? When you're going with, let's say if you go with a bunch of your friends, we're all friends, we're in this together kind of thing, and you're all trying to ride the ride together. You hop on, whether it's a roller coaster or a fucking carousel, doesn't matter. That moment when it's everyone else's turn to pull off and you're about to get on and you're kind of looking for the open seat still, right? And you're thinking like, I have to get in the open seat, right? They're going to lock the thing in a second. I'm not going to make this ride. It could be the same with anything, right? It's like boarding a train, right? At a certain time in Manhattan, hailing a taxi, okay? Wondering how much space there's going to be. So right now, when Bitcoin starts moving up, you start getting what I think into this frame of thought that ultimately it makes you less objective and less clinical about your decisions. So for me, I'm willing to add to spot at higher levels, but I'm not looking to add to any kind of swing positions in any kind of leverage exposure, right? In this environment, I'll absolutely be increasing my exposure. I don't use too much more than what I have. So I think that people think that leverage is too often a tool to use for increasing your exposure beyond what it is, right? I use it mainly for counterparty risk. Honestly, most of my Bitcoin is in a hardware wallet. It's in multiple hardware wallets, thank God. And I only deposit a small amount onto exchanges. Like I said, I have as of last night, I have either 6 or 7 different accounts. So sub accounts and then exchanges on Bybit as well, or accounts on Bybit as well. And I trade differently between Bybit and Phemex. And I haven't got into that yet, and we'll save that for another conversation. But I only have a certain amount exposed on those accounts. And then I'll use leverage to represent my off-account portfolio, okay? Just in case anything ever happens, right? And people have used this in traditional markets for the same purpose. Just because a brokerage house has has an address and it's, a public company doesn't mean that it's not going to go under at some point, right? And then all your money is tied up with them. You never want to do that. And in crypto especially, the benefit of the crypto market is that unlike any other market, can you take possession of your capital and of your assets in a way that you can't do in any other market, right? So that being said, okay, went on a little bit of a tangent, but you guys hopefully know how we roll by now. This is getting overextended, right? But overextended relatively speaking, Okay, this can continue to be overextended for a really long period of time. That's what we've gone through in the beginning. Now, I do anticipate that we'll have some type of correction by the time we hit 20K. And I think that you get some type of snapback and you get some type of shorter term range that forms. And I do think that it is short-lived. Right now, there's a ton of eyes on this right now, and there seems to be like there is a really strong bid on the spot exchanges. All right, you can see that this is just maintained now. This is constantly being maintained. Futures have briefly traded above spot, but we're talking about something that has, you know, a very short half-life. It's again, it's brief. It's barely recognizable. By the time that you pick up onto it, futures have already unwound and it's already come back in line with the spot actually at, you know, most of the time taking the lead. So more importantly, what happens when we see pullbacks? Okay, so when we see pullbacks, are we seeing this disconnect still? Okay, what we are seeing in pullbacks is spot really take the lead, which is phenomenal. Okay, so how you interpret this type of behavior is a little bit more advanced, obviously, than if you're just interpreting volume in a pullback. So normally in volume, in a pullback, you want to see volume decrease, okay? But as you get more involved and you're trading more along the lines with order flow, you're going to say, well, I don't really want to see volume decrease. I want to see, you know, I want to see actually volume increase at the bottom and get absorbed, right? And if you want a good basic book to understand volume and, hold on one second. Okay, so this is a really old book. Okay, this is 1931, Tape Reading and Market Tactics, probably redone. Good for volume analysis, very basic. So there's new people on this channel, and I know that you guys are trying to learn. So really simple read. This is 225 pages long. So this you could finish in an afternoon. And if you're really interested in becoming a better trader, you should be willing to dedicate that amount of time to just reading something. So Tape Reading and Market Tactics. Very good book on how to read flow of volume, just basic stuff, right? In strong trending markets. So when we're having these pullbacks, it's really good that in this case, we're seeing that the spot right here, so this is Coinbase, all right, a major fiat on-ramp is leading 39 to 34 right now, 37, 34, excuse me, it's fluctuating, is leading the derivatives exchanges. We're not seeing that futures are getting overextended and that there's this crowding on these platforms, right? Which has been sort of the story of the past, that has been a canary in the coal mine, or sort of you know, a death knell for the short-term trend. So if we have that progress, all right, here's a basis chart as well. So this is just showing us what we just looked at, but this is showing us on the daily. If we look at this right now, what you're seeing when this is above is that the futures are, the premium index is positive. So in this case, there are short-term periods, like I said, where the futures are trading over the index. Okay, and this is from BitMEX, though, so remember, this is just from BitMEX. Okay, what I'm looking at right here is BitMEX, Coinbase specifically, and then we'll go through other charts as well that I have set up, such as OKX, which has not been as actionable, but other exchanges, other futures exchanges such as Bybit. But what we're seeing as a whole is that we're really not into that point. So what you want to see for a top is that you have some form of a major response by sellers. Okay, price starts to form into a range, and you see that this progresses. So we haven't had that yet, right? We haven't had that. We haven't had that be the case whatsoever. This is the first day again that it started being positive, and we haven't had any kind of sideways consolidation yet. We're just continuing to take out previous highs. So when you see price begin to fall into this sideways pattern, consolidation, bracketed market, whatever you want to call it, then we're going to look for this to be prolonged, because then that's going to show you on the higher time frame to some degree that although price is stuck within this range, the futures are continuously getting overextended, and it's for no result, right? More work, less result, more crowded traders, more of an unwind maybe potentially setting up. So we don't have that yet. Okay, we have that very briefly, which is completely normal, because there's a lot of nuance to this, right? We can't say that, oh, futures are going to tell us when the market's going to turn off, right? Or when the market is going to turn. That's not the case. In a very bullish market, we could see this progress for a really long time. Why? Well, think about it. When the market is moving up, who does not want more upside exposure? So that cost of borrowing will go up, right? The funding rate will go higher. You know, you want more upside exposure, you're going to have to pay for it. The same can be said as to why you're paying for that, right? Why would anyone want to short in a very clear bullish trend? Well, they're only going to do it unless they're compensated, right? Or they're only going to do it if they're compensated. So shorts are going to be incentivized to open positions because they'll get paid that interest rate component. So right now, this has not taken place long enough whatsoever. And again, more recently, this has all happened previously now, so it's not like we could talk about this before. But we talked about this in the stream the other day. We talked about this in the, so BlockRoots members will know we talked about this for a while. The high being cleaned up. I talked about this on Twitter, right? Just making it obvious that this is not some hindsight shit that you're going to see maybe too frequently. So the high being cleaned up. What we would look for is that the high get cleaned up if there was a major seller up there at some point, right? If this business was rather unfinished and needed to be cleaned up, that maybe if the high was taken out and we were unable to significantly close above this level, and a lot of that's going to come down to, again, your discretion, right? After hopefully developing as a trader, because there is no sort of one size fits all to how to determine this. We could just pay attention to the things we learn with price action, what you learn with absorption. If you saw that this high was cleaned up and there was a sign that buyers were completely off sides and a ton of volume captured above this level, yada, 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 right? If price began to close back below there and then maybe fall below this prior day's value and we're back within maybe a range, okay? You're trying to build a case for one situation occurring over the other, all right? In this case, we had a range start to set up, okay? First reasons, value migration, value overlap, all right, inside day structures. Okay, we have a bunch of signs that maybe a range is setting up, but what is a range, right? It's just a period of sideways price action. What does a trend have? Ranges, right? Period of impulsing to consolidation to impulsing to consolidation to impulsing to consolidation. You're just, in a trend, you're just going from a period of complete disagreement, right? Buyers are completely overpowering sellers, okay, to more even activity, more of a battle taking place, and then buyers are, the idea of a bullish trend is that buyers have control, right? So took out the high, and I think that if you're looking at a target right now, it's difficult to look at this chart and we have, what significant levels do you have that really don't have much, in terms of memory, in terms of just order flow memory, resting liquidity memory, all this stuff. This goes way back. The best you're getting at these levels is them being psychological levels. Other than that, the levels above us, your whole numbers, right? Your round numbers, I call them lazy numbers. I don't know if I call them that or right if I've heard that before. At some point we're going to get to a state in the future where everything is plagiarizing or paraphrasing someone else, right? You've heard it before somewhere and it sounded nice. So these are lazy levels, 20K, 18K, 18.5. Why are they lazy levels? Well, let's just go to this is on the Phemex account. There's no real BTC on this. So if we go to, if we're trying to set a stop, if we're setting a breakout position, what is the easiest thing for you to do? Is it easy for you to go, all right, I want to buy the breakout of 8,074.5? No, the easiest thing for you to do is go 5 keystrokes, 3 of them are the same, right? 18,000. Easy levels, the levels that you anchor to right away. So those levels, what you'll see is that on a tick chart, they'll actually will accrue more volume. But other than that, there's no levels really that we can say with a certain level of clarity that, oh yeah, we know that's going to be supply. I mean, is anyone still selling from back here? Are they still in position? Get them out if they are, right? I don't trust people that are going to sell upon returning to that level. So yeah, let me look at some of your comments because I know I've just been going on. Of course we're taking chart requests. I just want to make sure we go over any and all things before, one sec. Let's clear this before we, all right. So let's see some of your questions. Good afternoon. What's going on? Okay, Grayscale owns 2.5% of total BT supply and just over 2% of the E supply. Good stuff. That is good. We want supply to be taken off the market. Of course, I'm going to take them. Yep. 10 3-day candles in a row if this closes green. Yeah, that's pretty awesome. Pretty arbitrary though, right? 3-day candle, it's sort of like, all right, what do we have that's not a daily candle, that's not a weekly candle, that's in between? A lot of the time, you see the 3-day candles are used to confirm how bullish something is. It makes sense, right? It's a periodicity higher than 1 day, below a week, okay? Sort of the best of both worlds, but it is always conveniently used because, I use it too. I'm like, look how bullish Bitcoin is. It's above the 20 on the 3-day. Of course, it's just a larger data set that it's showing you what the underlying data is anyway. But everything is overextended now. But I will not sell anything yet, really. I hedged now, I think 3 times. I hedged yesterday too. But I will not, offload anything thinking, I will not, let me put it this way. I will not offload anything under the, you know, strictly. I will not say I'm going to offload this until we come back down to 13 or 14. The last few times, just to be honest, that I've hedged, I've gotten back in within 12 hours. And, you know, when you hedge, a lot of times it's coming back to the point I hedged, or I'm buying, you know, $50 above where I hedged. I'm buying back in, right? So, you know, we're all people, okay? And I'm like, okay, things are overextended. This is, let me turn the music off. Sorry, guys. Things are overextended, but, you know, it is what it is. All right. Having a BTC pullback, see DeFi coins go in the same direction. I'll go through that. So I'm just looking through some of these right now. All right. So let's look at some pairs. So if you guys want to share some pairs in the chat, I wanted to talk about things in this that I had in mind first. Let's see. What do I want to talk about? I wanted to talk about, okay, one thing. So we'll get these out of the way. They're quick. I don't want to take up your time and go too much into something that's actually a simple concept to understand. Okay, so one thing you could do to really improve your trading, and you probably heard this before, I didn't come up with it, is don't look at your P&L. Don't trade your P&L. Very hard to not look at your P&L. You know, what I could say is, what's the best way you could not look at your P&L? Well, what you could do is you try to smash this up so you can only see the positions you're in, right? But at the same time, then you're not going to be able to have the convenience of being able to close this position out with that button. Or you just get the P&L off the chart. What do I mean by don't trade the P&L? It sounds overly simplistic, and sometimes I think it even sounds stupid. You have to focus on the setup you're taking, right? And if you want, look at the setup you're taking, just like a trader will, return their, performance based on R. Score your setups, okay? Your losses are equal to 1, right? If you're risking 1, and your gains are a multiple of your losses, okay? So look at your performance based on that. Trade based on that, okay? You're always going to get out at your stop. You're always going to, exit at whatever risk parameter you have set up. You're not going to look at the amount of money you're losing or you're gaining, okay? So once you start looking at the money, once you start focusing on the money, you're allowing emotion to come into your process. If you could completely cut that out in a way, and some exchanges obviously clearly don't offer it, but if you could figure out a way to make it such that you can't see your P&L for the trade, you would make yourself miles better, because you'd only be focusing on the core components of the setup, right? If we're talking mechanical trading, right? If we're talking about, you're taking, let's just quote the, it's like every new TPO trader's favorite setup, even though it's the one that requires more discretion than some of the others, is the Dalton rule, right? So in crypto, it's 76%, Dalton rule, it's 80%. So if you look at this setup and you just take this indiscriminately, right, and you stop out based on, maybe your stop is a multiple of 2 times ATR at that time frame, 30-minute chart whatsoever, 30-minute chart or any other setting you want to use. If it's a Dalton rule, you should use the 30-minute chart. But you're taking the setups, okay, you're getting stopped out where you're supposed to get stopped out, where you define your risk. You're taking profit where you have your goal set, right, forward looking. You're not getting in a trade, seeing it go slightly against you, seeing the trade go negative, and then closing the trade out. If you trade your P&L, you're going to really just focus on the money, okay, versus the actual setup. So I wish I could give you a really good way to do this. On more traditional platforms, there's more options to customize. So you could take away, for example, your positions and orders, but you could still see that you're in a position. If it requires that, for example, when you enter trades, so let's say that I enter trade and I am long 100 contracts, and my setup is, I'm going to exit out 100 contracts at this level right here, and then my stop level is, let's say, that's that, and then we'll put the stop. Whoops! Dumbass. Let's do that again. Let's say that I'm entered in a trade here. I'm going to place my limit, right? I have to go to conditional to do that. Hold on one sec. And then my take profit is up at 17.2, and then my stop is a market stop, and it's at, let's say, 17.4, right? And then that'll be close on trigger. And now, right, this is my setup, okay, I am going to get out of this trade when either my stop is hit or my take profit is hit. Okay, in the beginning, this is how you should be acting. You should not be adding too much discretion and feel or emotion to the trades. So in this case, right, I have my trade set up, and it's going to either stop me out or it's going to occur in profit, right? Now, I could take profit to the upside, all right? At some point, let's say we're getting close up here, I could take profit, right? If we're coming close to my stop, I don't want to say to apply too much discretion to this, but the thing is, you're not looking at, I don't have an idea of what my P&L is for the individual trade, right? I'm just looking at the trade. So this actually gets back to this. I'm just looking at the trade like a game, all right? This is the setup. I'm looking to score 2 points for 1 point, right? I'm willing to risk 1 point to gain 2 points. When you start looking at money, you start thinking, oh my God, that's bringing my account value down by X amount. My account value right now is at X amount. It took me this long to get to X amount. Damn it, I have to make this amount. You start really just thinking about money. You should be thinking about gamifying trading. So don't trade your P&L. That is one of the best ways that that you can improve your trading. And the best way that you can figure out to do that, I don't care if you take my trading setup at home is set up in a way where my screen, besides for the live streams, so when I do the live stream, I have to have it set up differently. But my screen is, I have a template immediately where the things go up that I want to be where they currently are. They never move. So what I can actually do, if I wanted to, and you could do the same thing, I could take a piece of electrical tape, right? And I could put it over my screen, over the P&L, so I never see it. And at that point, I'm just acting on the trades objectively based on the criteria that I set beforehand, not based on, oh shit, negative $1,000. Oh shit, you get the idea, right? Whatever amount you're dealing with. So that is one of the things I want to go over. We'll break that up. We'll take some of the charts that you want to look at, and then the last thing I want to go over is a concept that is a little bit more advanced. It's called momentum ignition, and it's something that works more in other alts. And I wanted to talk about why it doesn't work so much in DeFi. So for anyone's thinking about aping into DeFi, thin pairs to get this to occur, this is something that would have possibly occurred in some of the thinner alts, but doesn't necessarily occur as favorably in DeFi. So we'll go over that, but I want to take your charts right now. If I'm looking at this right now, the things that I am in are still looking solid. I've been talking about these for now weeks. AVE, SNX, Rune, I'm not, I got in and out of Rune, but at this point now, I don't think I ever got back in Rune. I feel like I'm juggling positions and I'm actually forgetting. Like the other day, I couldn't remember if I was in Link or outside of Link. Not in Link, so figure that out. But okay, let's go through some of the questions. This no, I'll answer your question, Crypto Life. It's all good. All right, let's see. Greg, let me see your question first. What do you make of the Bybit premium over BitMEX over the past weeks, switching to BitMEX having the premium? So in terms of the premium, what I would say is that you have to consider market conditions, right? Why would a market be trading slightly higher than the index? Why would it be flopping around the index to begin with? Well, if it is having trouble, if a market is, if you need to keep those in line to begin with, something that's going to make it more difficult to keep those in line, right, is going to be the level of liquidity, right? Because what you're doing is you're creating an incentive mechanism with the funding rate to keep the spot price, which is the index price, which is a derivative of the spot prices, to keep that in line with the derivative, which is the front month futures or perpetual contracts, right? Which I call front month futures because they are essentially front month future. They're essentially sort of like a spot future margin synthetic weird hybrid. So if BitMEX is becoming thinner now and more liquidity is available on Bybit near price, you're going to see that BitMEX will probably be trading higher than Bybit during periods when price is moving up and lower than Bybit when price is moving down. That's the best way I could describe it, just because there's a little bit less liquidity in your price. So think about there's less friction to deal with that incoming activity. So it's just going to push price further, to the upside or to the downside around that, the index. Okay, so let's see the Crypto Life, the controller. This is an Elite Series 2. I can't believe I play video games again, but I absolutely love it. It's a good break. And I'm not talking about playing I don't play for a long period at all. Sometimes I don't play at all, but it's nice to just, you know, I don't want to say anything negative, but to hop on there and just knock people down, right? You never know what you could say these days. Like, right, I didn't even know if I could say, you know, to hop on the computer and shoot people, right, on the video game, right, because times are weird. But, okay, yes, I do take chart requests. Right. So as far as LP, so you said, let's go through some of these. You said as far as having a BTC pullback, do we see DeFi coins go in the same direction? I think that what we're seeing in these micro consolidations with BTC is that DeFi is actually holding up, which is not DeFi as a whole. Remember, we're not talking about DeFi as a whole. That's the one thing we have to be careful with. DeFi, this is DeFi, right? This is DeFi. How many DeFi coins do we have? On CoinGecko, they're 98. All right, when I'm talking about the DeFi that is performing well, I'm talking about the top 10. I'm talking about the ones that are the blue chips. I referred to them as the blue chips before. These are where they are for a reason, right? The market has chosen these. These are the less speculative ones. These are the ones that have more backing, right? They have a higher market cap. There's more money behind these positions. This, again, this is not the same as, who is calling me from, I don't know, weird out-of-state calls. But this is not the same as, you know, your PiDAO or your Acropolis DeFi. Not to mean that these aren't good projects, but the idea is that the thinner stuff, the higher beta stuff is on the lower end of the list. You know, this is higher beta compared to BTC, but higher beta compared to this is all the way, you know, down here. The thinner, it's thinner, so it's going to be a lot more volatile than the thicker, more liquid pairs. So DeFi as a whole, I don't want to talk and umbrella all of these. When I'm saying that if we're talking about DeFi performing well while BTC is pulling back, I think we're seeing that all of these are performing well as Bitcoin pulls back, which is great because it's not like this really crazy ebb and flow where Bitcoin moves up and DeFi, you know, moves down, and there's this inverse correlation where it's one capital, you know, one asset benefiting from capital over the others. I think we're seeing this minor ebb and flow, but everything is rising together, right? So, you know, rising tide sort of situation. And in the stronger pairs, we're seeing that as BTC pulls back, right? So, for example, if we're looking at just pulls back, when I say pulls back, I'm talking about the consolidations we have. We haven't had any real pullbacks. So consolidation for the last, you know, we're looking at, if we go out, zoom out to this high, going back to the 12th, even if you look at, you know, the entirety going back to November 4th, right? If we look at, you know, things like Wi-Fi, held up, right? And this is against BTC. We're looking, don't look at the USDT chart. That's going to make you feel better than what reality might be. If Bitcoin's moving up, you want to see that it's outperforming or if not holding up perfectly. So Wi-Fi against BTC, you know, price, you know, when we look at TPO charts, I'm just going to go on a tangent for a sec. We don't think of price as any one point in time being very important. Price is distributed through an area, and if you were looking back at this and sort of putting on a, what would you call that, a regression line, right? Linear regression through these levels, you would see that the overall slope is upward, okay? I don't know if that word is called heteroscedasticity. Someone who's smarter than I has to tell me the word for where all of these points have, you know, an underlying linear line that you could be tracing through them to indicate the overall direction. Might be heteroscedasticity. I honestly don't know. But you want to be seeing that is occurring. Where BTC consolidates, right, it is allowing some of these other more speculative, they're not, you know, they're big now, right? There's some big names behind these projects, and they've had big reversals. So something like Aave, I've been talking about this now for the last 2 weeks, showing strength even during the time when Bitcoin pulled back. You want to be looking for that. Not everyone is going to share that, right? So what I've noticed is that when Bitcoin has had big pullbacks, these have been, if not the same, right, slightly better, which is really good. Okay. All right. Have you read the IBAN white paper? No. It's been a really long time since I've read any white paper. You know what the most recent white paper I read was? The Bitcoin white paper. I read the Bitcoin white paper again a few days ago. And do you want to know why I read the Bitcoin white paper? because I'm a dork, and I was actually, not because of that, because everyone has read the Bitcoin white paper, hopefully. It's meaningful, right? It should mean something to you. I read the Bitcoin white paper again because I was actually looking for a nice, like, framed, kind of aged white paper that I could buy. I felt like, if you could think of something, it's available to buy, right? So I was like, you know what? In my office, I want like a Bitcoin white paper framed. Does that sound stupid? I think it sounds pretty cool. So I was looking for that, and I'm looking for some sort of aged look, right? Not just actually a really white and black contrasted white paper might look cool because it might look more, technical. Who knows? But we'll see. No, I haven't read the IBAN white paper. On XO charts, is it better to use specified volume or volume delta for each candle? It's all up to you. Guys, a lot of things on charts are subjective, right? It's a personal preference thing. Is it better to use specified volume or volume delta? Depends on what you're looking for. Am I really interested in knowing exactly, in the distribution where we had a majority of sellers versus a majority of buyers? Do I need that right away to know? No. Are some of these things really useful to help people that cannot pick up on that information maybe as obviously in other ways? Yes. So it's sort of like, do you need to look at an RSI to see a divergence in momentum? Me personally, no. I could tell you that, before we look at a chart, that's going to pop up as an RSI divergence, because in a trending market, there's always going to be divergences. Now, I know that because of the price action, and indicators are mostly, 99% of them are derivative of price action, right? So it's showing you what you already see, but you don't know how to interpret. So when it comes to specified volume versus volume delta, and we'll go to XO. I've been using XO more frequently lately because, we'll get into this in another stream. I'm trading on different exchanges now using different sizes. So we'll get into that, but I'm using XO more frequently again with Sierra. I think Sierra is phenomenal, but if Sierra doesn't port on new exchanges and new connections and all that, right? Then why am I going to stick with Sierra? For what? For good times that we used to have? Like, I'm not trading the ES with Sierra. I'm not trading the ES anymore actively, really. I'm not trading gold. I'm not trading crude oil now. I'm trading BTC. So hanging on a platform because it's, a great platform. Once things improve to where it's obsolete, that's all it is. It's obsolete. Like, who's still hanging on to a old StarTech phone because they liked the movie Wall Street and they want to hold the StarTech phone? I think it was a StarTech phone, right? So I think that XO is actually creating things that look like Sierra, where you're going to have templates, which is going to be phenomenal, because this is one of the reasons why I love Sierra, because of the way that it's hard to figure out in the beginning, but it's a great platform. But in terms of what you're talking about the volume profile, right? Something like this, and whether or not you want to show, this is one example of volume profile, right on the left-hand side, whether you want to show the delta or the total volume, or in this case, you see the bid ask. I don't really use this on here, so I'm not going to, what you see right here is pretty much majority of what I'm going to be looking at. And I have a few different charts. So this is lower time frame trend reversal. This is the lower time frame volume chart, and this is the TPO chart. That's up to you, right? It's completely up to you. You have to find out what works for you, what you're using, what you're referring to. Here's my opinion on anything on your chart. If it isn't serving a purpose, it's got to go, right? If it isn't serving a purpose, almost immediately, right, in the trading process. So if you have everything covered from the way you look at the chart from the higher time frame down the lower time frame, all right, and you have everything covered, okay, then you don't need anything. Then what you can do at that point is, if there is any fluff on your chart, you want to get to the point. So here's the concept. You want to get your charts to the point of irreducible complexity, right? So that's just a fancy way of saying get the shit down to the stuff you need. So you'll find, do you need to have that delta? And you only find that if it is something that's actionable in your trading. Otherwise, you might find, well, I had the delta on the chart because I thought I was interested in knowing the specific selling at those levels. But actually, I'm looking at the lower time frame candlestick anyway, and I'm looking at the delta at an individualized level. So actually, I don't need to look at the delta on a volume profile. All I actually need for the volume profile is the shape of the profile. So you see where this is going, right? So you have to play around with things to figure out if you need them. All right. How do you think the upcoming Uniswap ETH dump will influence the market? I have no idea. Your guess is as good as mine right now. Is the market interpreting right now that it's going to dump? I think that if the market was interpreting that it's going to dump, we'd see more of a sell-off in ETH. Who knows what the actions of all that, those people locked up are going to do, right? Is it going to, I don't know. I honestly have no idea. Are people going to stake in 2.0? I don't know enough about ETH. That's always the truth. I always make that very clear. I'm not like an ETH person whatsoever. I don't know a lot about the protocols. What I try to do is find other people that are really smart, right? When it comes to, I'm subcontracting my, I'm subcontracting all that stuff. That's not my area of competence. This guy over here is really smart with it though. I trust him. I've checked on what he said now for the last year. I will look further into it when I have the time to, kind of thing. But as far as the ETH dump, I'm not 100% sure what to expect. Could you look at the YF order book on Phemex? Talk about the spread and liquidity. Sure. Absolutely. Okay. All right. All right, so in terms of spread, you have right now a $4.50 spread. So $4.50 spread, right? What's the math on that? $4.50. Well, someone bust out a calculator. It's a decent spread for what is going to be a less liquid asset on the platform. Why? If you look at Wi-Fi on Phemex, right, by volume, right, 239 Wi-Fi. I wish they would normalize this in USD terms, even though I know that that's not maybe the case. Maybe not everyone wants that. So that is $4 million, right? $4 million, and yeah, it's one of the less liquid pairs on Phemex. So there's going to be more of a spread, right? It's going to lead to more volatility. Wi-Fi compared to Bitcoin is less liquid than Bitcoin. It's going to be more. No matter where you go, you're going to see this relationship between Wi-Fi, Bitcoin on any exchange, where if you have both of them offered, Wi-Fi is going to be hands down, no matter what, it's going to be the less liquid pair. I can't say too much about this being negative because I've actually traded Wi-Fi on Phemex quite frequently and placed considerably large positions behind it. Now, some of those were partially filled with market orders and limit orders, so who knows to the extent of the slippage that I might have had to bear if I just went, chasing after this. The same thing being said, the same thing you could say though is, okay, so this is less liquid. It's something that helps the momentum, honestly. Not something you want to see for sustaining momentum, but initially, less liquid pairs, more of a spread to jump. Jump in that spread brings the price up. Can't say too much about it. There's not a whole lot to say about it. It's less liquid, obviously, than some of the other pairs. But in terms of being... So recently I was doing tests on exchanges where I was taking... I won't name all the exchanges, but I was taking a couple 100,000 contracts and dumping them. And I was dumping them into the bid and dumping them to the offer, doing the same exact time. I was doing this manually. So it's, you could look at the time on one exchange and time on the other, and yes, it wasn't exactly at the same exact time. But if you're looking at the book, and I'm looking at one right now, if you're looking at the book and you're looking at, for example, Phemex's book, their near price bid was basically the same. The depth began to change outside of these levels. So what I was noticing is that, pretty close up to a certain point. And then, yes, of course, I've gone over this time again. Josh and I are partners with Phemex. Phemex is a new exchange, right? The chicken can't come before the egg in exchanges. Liquidity has to come by people showing up and continuously providing liquidity. Otherwise, you're going to have the liquidity you have near price is going to be dependent on people who are placing resting liquidity willingly, or your market makers that are on the exchange. So, Phemex is going to ultimately improve with more people coming onto it. I think that and this is the point I wanted to originally make, for 99% of people, the liquidity is not going to be an issue. For 99% of people, it's not going to be an issue. For that 1% difference, though, from traders that it matters, they're going to be trading probably much larger quantities. Or the window from the point in which that starts mattering to the point that it gets to the extreme is much different. All right. Okay. Oh, there's Chrome extensions so you can hide P&L with CSS. Mr. Coinman, that's awesome. So that's the best thing about things like this is that I'm learning stuff too, right? Yeah. Electrical tape works too, I guess. Yes, absolutely. DeFi Mayor. So Lewis, I think, or Luis, however you're supposed to pronounce that. Sorry. I think it's Lewis, right? Lewis. What's your take on Wi-Fi? I think Wi-Fi is I think it is sort of the SPX of DeFi, right? It is, if Bitcoin is the SPX for, or broader market benchmark for all of crypto, I think you have sort of these Russian dolls underneath it, right? You have the smaller DeFi market, and then for that it's Wi-Fi that is the SPX, but Wi-Fi still behaves according to what BTC does. So it's interesting. So this is actually one of the more fun things about the crypto market. There's all these really cool relationships, and I think that, you know, when you know these relationships, that's what makes trading really exciting, because it's those trades that actually make you feel like, oh, that was awesome. I knew that relationship existed, and right now it was out of whack, or it wasn't maybe at parity, and, you know, it's sort of like you're manually stat arbing. Not to say that you're doing that at all, but to play off of these sort of odd little idiosyncrasies, I think that's one of the things that makes this market unique. Now, in traditional markets, you have a ton of those, right? But there's less of a lag between one affecting the other, or one catching up to the other. With Wi-Fi, I think that it is the sort of leader for DeFi, where, you know, Wi-Fi is the pack leader. Wi-Fi starts moving up. You see Wi-Fi moving up. Let's just give you an example, right? Let's not just talk about theory. We see Wi-Fi moving up. I guess this would be theory until it happens again. But we see Wi-Fi breaks out, right? Wi-Fi breaks out. Wi-Fi is now just put in a 10% move, and you have pairs like, let's go to the one under it. How would you pronounce this one though? Wi-Fi. This one. You can tell I'm out of this stuff, guys, because I don't know how to pronounce these, right? I don't know how you should probably say them. But let's say that we have Wi-Fi breakout. Boop. Okay. If this hasn't broken out yet, I am 90% certain that this would follow. Okay, and this offers me an opportunity to get into a laggard for a leader. I think that Wi-Fi is the leader, right, in a lot of the stronger DeFi pairs. So you could probably, would you say interpolate at this point if you were going in, right, into the, that would be as if I was saying that Wi-Fi was actually the leader and everyone was following, and then we're interpolating. But I think you could apply that to most of these top pairs. So whether it's Uni, whether it's YF Link, whether it's SNX, Aave, just to be as open as possible. And I don't say this just to be open, but I think, I'm not supposed to give anyone financial advice. I don't want to give anyone financial advice. This is not meant to be interpreted as financial advice, but I always like to be as transparent as possible, right? There are times when I share charts and I'm like, I'm not in this. Like, it's not liquid enough at this point, but whoever who wants to get in on this on a lower scale, like, be my guest. When it comes to SNX, Aave, I'm in those heavily, okay? Yesterday morning, the night before, forgetting when I rebalanced between those. I got out of BTC, I got back into BTC, and then I took out of Aave and SNX, and then I actually added more to Aave and less to SNX. I'm in those heavily. I think that they're going to follow regardless, but I think that Wi-Fi is a really good leading indicator for the stronger DeFi pairs. That's all I could say about it, to that extent, though. I don't know enough about it. All I know is that DeFi is now not only just, DeFi has a lot of things that need to be worked out. The whole produce section of assets is absolutely ridiculous because, there's a lot of hype and it was easy to get these assets out. And, there's a lot of behavior that was unscrupulous with rug pulls and all of that. We're familiar with that. That happens anytime there's anything new. There's going to be the shitty parties that get involved. But all of the real core of DeFi could tremendously revolutionize, or just, you don't have to say tremendously, right? Just revolutionize finance, right? All the applications that we're seeing sort of having fun with because they're games, they probably need some fine tuning, but there is a place for them in the traditional finance world. And when it comes to lending, this is something that crypto is lacking for a really long time, right? Like a fixed income market. But, I think that Wi-Fi has a future. I think that Aave especially, You know, not just saying that because I got into it, because I wasn't one of the early people in Aave who has been beating this drum. You know, I only started really researching these things in the last month and a half. You know, otherwise I was saying, you know, if you asked me, hey, what do you think of this? I was like, other people like it. I like it if it moves because other people like it, right? That was my very if-then approach to momentum in this market. So I don't know about BitMEX and withdrawals stabled. I'll look at Alpha in a second. All right. Kava USDT. All right, so let's go through. Let's make a little separate list. So new list, just for the live stream. The live stream. We're talking about Wi-Fi so much. Stream. All right, so Alpha. Let's put these up here. Alpha. Now I'm not going to forget my point about the DeFi pairs when it comes to momentum ignition, because I think you could learn some cool stuff when you're in these streams. All right, so Alpha. All right. Thanks, Ripcord. Use Zapper or Zerion to track DeFi. I appreciate that because I really want sort of a trustworthy, centralized source of most of the market information. Kava. Let's look at Kava. Notice how I'm pulling up the BTC chart as well. In a bull market, I want to make sure that if I'm getting out of Bitcoin, that I'm doing something that is performing relatively strong to Bitcoin. So I have to pull up the BTC pairs. Bitcoin is the leader right now, I think. All right. Aave just broke its highs. Let's go. All right. Did it break him against BTC yet? Moving up. All right. And heteroscedasticity is when a variable in data expands or contracts over time. Wasn't thinking of the right word then. All right. The framed white paper idea is cool. I'm just looking through any update on DOT. Let's look at DOT. DOT. Okay. Haka. I think Aave will definitely go over 3 digits. I think Aave is really undervalued right now in terms of a platform. All right. And okay, so not only that, when Bitcoin was being put on the news again, front and center, which we'll see when it breaks the all-time high massively, but it wasn't just Bitcoin. A few of the major outlets in a bullet point right under Bitcoin put the new DeFi craze, okay, and it highlighted some of the features, and that is just something that has been thrown out to the public now. And, you know, it's thrown out to the initial people that are looking to chase any kind of return. But that all just spells that this is going to be, everyone talks about the old alt season. They're all going to be different, right? But this cycle is clearly for the leaders not done. We had a V-shaped reversal in the majority of them, and it was something you don't see too often at all. So that was really good. Uni, Dave, I'll get Uni up there for you. So Uni Bitcoin and Uni Tether. Okay. And all right, SXP. Of course, I'm not missing you guys. I say I want to do the Q&A and take charts. Got to make sure we look out for everybody and get the charts. All right, so let's go over. Let's go over the how's Ocean on your charts. Don't know, but we will shortly. Let's go over these first. Okay. Oh my God! Wait a second. I'm so excited for desktop XO desktop app. That's what I thought. I was not certain if I was a rumor or, oh my God, I'll be all over that. All right. Okay, so let's look through these. YFL. So, and then YFL, and then we'll get a look at these. And we can go through these pretty quick because you'll see that I go through these fairly quickly because it's not that difficult. All right, so Alpha, geez. What do you need to know about this chart? It's just on a run. Is there any longer term time frame chart that I could look at to really get an idea of where we sit in this is probably that new though, right? So 1 year. Oh, this is new. So this is just ripping upward. You know, I don't know anything about Alpha. Let's look at Alpha really quickly from max supply, 1 billion. All right. Market cap, $31 million market cap. Fully diluted valuation is about 5 times that. Not going to get too much into the fundamentals though, but in terms of room for growth, absolutely room for growth. I'm not sure about, you know, I don't know anything about this in terms of fundamental details, but that fully diluted valuation is, it's 5 times the current market cap, right? And the circulating supply is only, it's basically 5 times less, right, than what is totally available. So I'm not sure how that distribution works with this pair, but let's stick to the charts because that's not something I too often get into. But this is just a really strong trend. There's not a whole lot to say, my friend. In terms of levels, right, where are your more important levels within this chart? It's just been one-way trip on the daily since all the way back down at 51.71. And, there's really not a whole lot to go within microstructure. So if this is a really strong trending market and you're looking for a level, you got your 20-period moving average down here at 12. More recent local structure down around 12.13. But these things in this kind of environment, remember, you have to, if you get a pullback back to this 20 and you start to consolidate, right? So you're around the 20, you're around more local structure and the rest of the market is moving up. At this point in time, it's difficult to think that something just dies, right? If something is moving up, it's telling you something, that buyers are more interested than sellers. And this is in price discovery now. So that could continue for a really long time. The trouble with looking at assets on charts like this and then saying, well, this is your local level, is you think, okay, I'll buy it down there, but guess what, pal? 2 months from now, we're looking at the first time we have a really close local level, and it's when this is already at, $1, right? So alpha just ripping, right? It's dangerous to buy up here, but, in terms of the trend, that's just because we're not close to any more recent structure. Kava, you can see I still have levels on this chart. And I said, this level would be the level to come back down to. This is just based on weekly structure. Previous weekly consolidation against Bitcoin. Kava is, not looking too hot right now, right? This is from the last time we looked at this. I guess I still have it open. Your pivot level that you need to overtake, it's just still acting as resistance, is this 10,606 level. So you could see, right? This is there's no magic to this. It's just where has price had trouble with and pivoted from? Where have we seen a big response? Well, initially back down into this area, price slow down, big spike. And if you're going to be bullish, you would want to see, all right, we're back above this level. In the interim, at least you have some case for relief, maybe back to right around here, right around 17,000. So instead, we're back on this live stream after I think we looked at this 2 streams ago, and we're still having trouble with the same area. It happens to be that I think we talked about the moving average with this one as well. So there's a confluence of activity over here, or confluence of levels over here, both dynamic and static, that if we're back above, let's just say 11.5, right? Then it's clear though, right? If you have this and then against BTC, you're starting to put in something like that, then you're probably coming up to this more recent local low. That's against BTC though, right? It's just showing you relative weakness to BTC. Some of your pairs that have put in massive moves already and haven't found a bottom could still just be in progress, and they're going to show relative weakness compared to BTC. If you're looking at this on the Tether chart, it looks different though, right? It's just showing you relative weakness to BTC, but Tether chart retesting the top side of this previous structure that was really important. The first newsletter we put out had Kava. It was right here. And I remember thinking, oh my God, that was a nice gain. And then it went on to 2-3x from there. But this is the area you would want to see act as support. So as long as we hold this, right, hold up against BTC, maybe we'll be sharing a week from now a really good Kava opportunity. Aave, awesome, good stuff. I'm excited to look at my portfolio in a second. Uni, all right, so Uni against BTC. Okay, more local levels. All right, let's open this up. Just open that and then go to the daily so we'll see more specifically. So I want to have this on the stuck in drawing tools. All right, just your weekly, whatever you want to call it, order block, area consolidation, last area where buyers and sellers were in agreement before, or again, sellers were in control. So you get this pivot down here. All right, nothing special about looking at this, right? We're just seeing price overtake previous levels back above the 20 period. But, you're at resistance right now, right? You're at resistance. just an area where buyers and sellers interacted with previously. If you gain acceptance back above this low, then yes, I think you're looking at clearly higher. But at that point, it's it's very if this then with alts, which is kind of obvious. So what I like to do is, if I'm going to give you some sort of extra on top of what you might hear anywhere else, is if we see that this is already showing initial signs of strength, putting in a low, then in my eyes, the probability of these areas holding looking forward with a market that is continuously moving up just becomes a little bit weaker, right? So if you were in a very strong ranging market, or if you were in a period of ranging price behavior with BTC, with ETH, and things are kind of iffy, then I would probably be more predisposed to taking profits at the next levels without any kind of thought, right? In these conditions, I am more prone to thinking that the levels above us are areas where you should manage the trade more, or expect to manage the trade, or just expect some level of kickback, and that can, I guess, qualm any fears you have. Qualm or calm? I think qualm means the same thing. All right. Oh, there we go. Uneasy feeling of doubt. If anything, in this strong trending market, I think that you could sit a little bit more comfortably knowing that, all right, this is the next level of resistance for Uni, but this is a great piece of evidence so far that the trend is changing. Not only that, context being most important, what is the rest of the market, the broader market, or rather not broader market, but specifically the stronger DeFi pairs doing? They all have wind in their sails, right? Wind at their back. So Uni might be showing, you're probably going to be able to see moving forward what is relatively strong and relatively weak compared to the other DeFi pairs, and maybe you try to rebalance from that, but everything right now is looking north. All right. And then SXP. SXP, all right. Has more work to do, right? So you're just seeing right now, you're getting a snapshot of what is weaker and what is stronger in this whole period. So what has more ahead of it in terms of levels to overtake? So most recent pivot is this high. Nice amount of confluence between that and that 20-period moving average. It's good for the altcoins. But again, touching on the last point, let's say you're overtaking this level. Let's say that you do something that I like more is when you have a low put in, but then you spike it and we're back above it, right? It just shows you that bang, price made another attempt at the low, caught a bunch of players down here, and then we've had the reversal. And at that point, I have more faith in a trend reversal. But let's say that this just overtakes the high and it's just that easy. You're above the 20, you're above 6,500 sats. Then you're looking for 10,193. But again, remember, if everything is on the way up, is this then my first take profit? This has a good amount of distance to cover. So maybe by the time that we're on path to that level with SXP, if let's say Bitcoin is beginning to have a major correction, right, moving sideways, ETH BTC is moving down, you take a little bit more context in at this point, because you have, I think there's more clear, the things that are lagging right now, you have to anticipate that if they're weaker now, they're going to be a little bit weaker at the wrong time moving forward. So, all right, Bitcoin's correcting, ETH BTC is correcting, this is approaching resistance, I'm going to take profit. Versus ETH BTC consolidating, grinding upward, BTC have just finished consolidation, moving upward, Wi-Fi moving upward, taking into account the other market leaders, and then we have this moving up. Is this going to correct then? Or can I say, this is where it might turn, but I'm going to add when it comes back down here. So SXP, not the most attractive out of all of those, right, in terms against BTC, and I think you have to look at BTC right now. If ETH was leading again, you'd look at ETH, but it's not. This is kind of ugly, got to be honest. Kind of ugly chart. So just look at your more recent weekly levels. These, I put a whole great deal of importance on weekly levels. So you guys might use something else, but that's why the first thing I refer to is your weekly pivot. Just shows you. This is the highest time frame level on most people's weekly candle setting. Technical traders acting on behalf of levels more often in alts going to have more of an impact on price movement. Just more eyes on charts, more eyes on this level. So it becomes that much more significant to me. So that 3473 level, I think, is the most important thing, and you're dealing with that right now. But even then, you know, this is just showing me, this is something I would pass on, right? Unless we're back above this high, so 38, which is, if you look at this on the weekly, you know, 38 is, it looks like it's in nowhere, it's in the wicks. But I think on the daily time frame, more refined level, you see that, you know, if we're back above that, then maybe you have a case for, at this point, I shudder to say it's some weird bottoming structure, right? And then that's you know, a reversal at that point. YFL testing the top side of a previous range. I think YFL is just lagging Wi-Fi. It's one of the pairs that has a slight correlation, but I know there's been big developments lately with Wi-Fi. I don't know enough about them though. Josh knows a whole lot about those. In terms of a technical setup, above the 20-period moving average, above the more recent levels of resistance that have acted as resistance, now treating it as support. Try not to overthink things too much, right? I'm not marrying this. I'm not, you know, I'm not, you know, this is not something that I have to think too much about other than, all right, testing this level as support and resistance flip above the 20-period. Limited amount of criteria considering the context we're in. Okay, going to risk X percent, place a stop below this more recent low, below, let's say, one, you know, it's hard to say volatility period with alts because they are very volatile, but, you know, below the 20, below this low right here, and I'm targeting of this high. Okay, stopped out, it is what it is, not committing too much anyway. SXP chart on Qcoin. Yeah, I know that's one of the ones that was one of the earlier ones with Kava. You know, it's when you look at it here, you're at these historical lows. So those are important to hold, clearly. At that point, you know, looking at that though, I'd kind of want something like this. But to say that, it's like, how much do you actually want this to go up, right? I'm not in this, so it's, if it does that, then I'll mark it out. But otherwise, this is a chart that I would just look past right now. Under my approach. Yeah, Lend and Aave are connected. If you held Lend, you know, Lend and Aave are connected. But I wasn't part of, I haven't been in Lend since who knows how long. If you were in Lend, you received a certain amount of Aave, whatever it is. Dot. No, we didn't go over Dot. Let's go over Dot. Dot has some work to do now, right? Dot was looking strong initially. It looked like Dot was going to turn over here. All right, but again, no significant close through that 20. Retook a level, but immediately lost it. And so what I'm just doing is looking at the last levels a lot of the time with alts. I don't look too much into the fundamentals or on-chain data or any of that. So that is what I require, at least first and foremost. Okay, if that's satisfied, then I start, you know, looking more under the hood, but it's very limited even at that point. But if I don't have that, I don't care, because I don't have the time to look into something that might not be, you know, available to everybody, that they don't know about, that is on the horizon, that is going to make it pump. You know, I'll be late. I'd rather pay to be late than pay for it by being early. There you go, 100 Lend to 1 Aave. Cool. Cool. Yeah, so another thing I want to talk about. All right, and then this would be like one of the last points, take some more Q&A, but I think we are about an hour and 12 minutes into it. It's not bad. All right, so the concept of momentum ignition. Let's talk about alts first, and then let's talk about DeFi. So someone said, what did someone say? Someone say a pair that was really thin earlier. Let me look for it. All right, where is it? I don't remember the name of it, but it's up here. Where is it? Thanks for all the comments, guys. I appreciate that. I can't see. I'll find it in a moment. All right. Haka. There we go. Okay. Why do I know about Haka recently? Someone might have shared something, but let's look at the Haka chart. This is probably a perfect example. I appreciate you who have named Haka. It sounds really funny. I appreciate you who have named Haka. Okay, so this is a good chart. Who just named Haka? All right. Damn, I just lost it again. 1 second, guys. When I get my head on finding something, I need to find it. All right, LP. Okay, LP. That was more anticlimactic than I thought it would be. I thought your name would be something I'd be able to say, but you're just LP. All right, so momentum ignition. This is something that is, it's, popular method in traditional markets to provoke market movement. And if you're on trading technologies, there's actually tools that are used to monitor for this, depending on the activity that occurs at the order book. So let's talk about momentum, right? What is momentum? Momentum is, herding behavior. Momentum is, serial correlation and price behavior, order correlation, serial correlation, right? Higher prices beget higher prices kind of thing. You're pulling more people into the market. You're having people chase the market upward. Buying at market. All of these things are part of a high momentum market. The idea that, previous price behavior will persist into the future and gain strength. So there are reasons why momentum picks up in crypto. Short-term momentum more frequently, where you see that, for example, an area of stops is run. So when we see, for example, I just said for example twice. When we see that, let's say that price has been making a series of higher lows, upward movement, no low has come into the prior, series of higher lows. We talk about this as sometimes how it is kind of dangerous, right? Because each one of these has stops under it. All right, you get long here, I'm long here, stops below there. Oh, you got long maybe here, stops below here. You got long here, maybe you're using that to place your stop, and so forth, all the way up. So you have a pool of resting liquidity below each one of these. But it's resting, but it has one purpose, right? It's to place it's to execute an order. So it's usually a market stop, right? So price triggers into this level, it automatically sells at market. So in the case of a long. Now, this is dangerous, right? Because if price has not taken out any one of these lows, okay, it's just a cascade in the making, right? If price comes into this low, you get an immediate response, involuntary selling goes into and when I say involuntary, it means it occurs involuntary. The person's already placed the order voluntarily, but they're away from the computer. It's a market order. It executes on their behalf. It's triggered, comes into the next level, triggered, comes into next level, and this causes a big move, right? Now, those levels, we could look at them on the chart and we know that that's possible. Right? We talk about that. Oh, we have this perfect stair stepping up, stairs up, elevator down. Now, you have that in ranges too, right? When you have a range that has a few days behind it, people talk about ranges if it's trading ranges is so easy. It's so easy in hindsight when you're looking at it already formed. Good range traders are able to see that it's forming when the price is right here before it's done all this, right? They're looking for signs early. Otherwise, it's so easy to look at a range and say, yeah, you trade it like a range. You trade at the value, you sell at the value area high, you buy it at the value area low, bada bing, bada boom. But it's never that easy, right? But after a range has been formed for a really long time, what happens is I get short here, you get long here, you get short here, I get long here, moving forward. So the shorts up here, their stops are above here. The longs stops are below there, okay? You have, at the high, you have not only the shorts stops to get out, but you have long stops to go up. So breakout long stops. At the low, not only do you have long stops to get out, but you have short stops, market stops to buy, to sell, to get, into a short breakout. All right. That's what helps the reversal patterns through here. Okay, so when, for example, price takes out this high and you stop out a short, right? Increase that pressure upward, you trigger a long that has an OCO order. Maybe their stop is back down here. So if price comes back into the range, it's more likely to move down to the bottom because it's triggering all those OCO orders that are attached to the market buys that end up moving price back down, right? So that's kind of the ignition, right? It's the orders that helped price move in that direction. So when we're looking at a range that's formed for a really long time, knowing that there's all of this energy on the outside of the range, right? Take it back to physics 101, right? You go from a period of highly kinetic activity, ranging, consolidating, building up, going from kinetic to potential. I said kinetic. Did I say kinetic to potential? going from kinetic to potential. So what you're doing at the top side and the downside of this range, or the top side and the low side, whatever it is, got a hamburger right there, right? Or a hot dog with ketchup across the top, or mustard. I like mustard. You're building up all that pressure. Think of it like a minefield. So in traditional markets, this is something that's done. It's done with BTC. It's done with altcoins. Knowing that there's all this resting liquidity, a big player will try to push this and provoke it. Sort of like the domino, right? They're willing to push the first domino. What does pushing the first domino mean? It might mean that they take a very small portion of their capital and they lever it up, right? Let's say that they go onto BitMEX and they lever up what's the maximum position depending on their risk limits? What is it? 5 million, 4? There are caps, right? Who knows? They could do a couple positions, all right? And they're going to throw those positions away, honestly, because they're levering them up maybe to 100x, trying to create as much market impact as possible. And let's just imagine it's more palpable if it's at the low, because everyone's worried about the low. So you have all these stops down here, so stops. So what they're going to do is they're going to borrow on BitMEX, all right? They're going to already have a big short position in maybe, and they're going to dump, or maybe they have a buy position they want to fill down here. They're going to dump at market to try to get this to move through this level to trigger all of the stops that are below here to create momentum. So they're willing to essentially throw away money for this portion to cascade the market from that portion to this portion, right? So in this portion, I'm just talking about the drawing. So this is momentum ignition, right? They're willing to be the spark, okay? And it might mean that they are, they're like the guy in Independence Day, the hero who flew the jet up in the spaceship to get to save the world, right? To create the massive chain reaction that killed all the aliens. So that is what the first position is. It's the sacrificial lamb, right? And they're trying to create as much market impact as possible. Maybe they're just buying at market if it's at the high or selling at market at the low. They could do this on the spot exchange too with a good amount of supply. And they're trying to trigger stops. And what this would do is, they'll have an underlying position already, and this will get the move going. This can be done in positions with alts, right? In positions that have a lot of resting liquidity, that have stops, right? That are easily used by everybody. In DeFi, there's not the same availability of these order types, right? And if it is, it's not as readily accessible to everyone, right? Most people are swapping. They're on MetaMask. They're on, 1-inch exchange, which I think offers stops, right? And limit orders. But most people are just aping into these things. And I think what a lot of people are doing is aping into this to cause momentum ignition. So you'll see that a whale will buy up a large amount, and then they'll dump shortly thereafter. So what they're trying to do is they're trying to buy up a large amount to psychologically provoke momentum ignition. So there's no stops that they're really going to be triggering that are going to cause a cascade to the upside. So it's not like BTC where, let's say that this is the high that everyone's focused on. We know there's a ton of resting liquidity up here. It's not like BTC where they know, okay, if I could just push this above that level violently enough, we're an altcoin, right? Algo, who cares? Whatever it is. The thinner the better. Where they could push it into that level and expect it to continue. In a lot of DeFi, sorry, having indigestion. There's not a lot of that resting stop order type of clusters that we have, right, in the other assets. So what you're getting is the attempt to cause momentum ignition, through just psychology alone. Through, we see someone just bought up a ton. I'm going to chase that. It's going to start moving, and then there's no sort of secondary, mechanical effect that's connected. There's no secondary response that's connected mechanically. Right? It's not like they're tripping a bunch of orders to buy or to sell in the case of moving to the upside or to the downside. So this is something I think of because I think some people think that it's a good way to get into things as well. Aping in. They ape in, they buy a ton, they hope that other people are chasing it and that follow in this herding behavior. But there's a reason why it actually works more in assets that are on centralized exchanges, that have these order types that are readily available. So I think it's something to learn, if not maybe so important to you, it's just something to learn, right? The concept of momentum ignition has been prevalent in traditional markets for a really long time. So much so that Trading Technologies has something that monitors for it. Okay. Gibbon. Here you go. Gibbon. Me, LP. Nice. Does anyone have any other questions about charts? I mean, we went over a few charts. BTC again. Let's just traditional markets right now. We have the Moderna news, 94% or 95% efficacy against the virus, but we'll see, because apparently it's going to take a really long time for a majority of the people to gain access to that. You know, not everyone is a higher up. Not everyone is, I guess, you know, not everyone is, for example, one of the people that are more prone to having a serious illness from it, so they won't be prioritized. Makes sense, right? But I think that market is in a place where it's overreacting a lot. I think that the SPX either way is going to be moving up over the next 6 months either way. I want to look back at the marijuana stock to see how they're responding still, because there's a knee-jerk response by them initially to the news of a Biden presidency, and then people got upset because they sold off. But remember, this is a macro trade at this point. If there are more friendly conditions for majority of cannabis and medical marijuana stocks, we're not worrying about this in the short term. We're talking about something that you know, will allow for the further development of this sector. Take a look at, what do we have? Where are my equities, large caps? What's up today? Bank of America, no, Boeing. All right, so we're seeing some, it's interesting the types of responses we're seeing and the shifting as, you know, positive news comes out to where negative news comes out. For example, last week, Budweiser was up. Abbey was up. What's it called? ABV. So Abbey V. Companies that are likely to start seeing some relief when people are able to go back out, right? When people are able to go to restaurants more frequently again. Tech companies not really experiencing a good response from it, just because there's going to be less people cooped up at home and on their computer and using Facebook. So the market right now is very sensitive. I think that either way, it's going to be moving up over the next 6 months. I don't want to be cynical about the virus. You know, I don't want to talk too much about it though, because, you know, it's my opinion, right? I'm not a biologist. I spent a year in college studying biochem, but, you know, it's for me, it's like a hobby. It's for me to open my mouth and talk about it is just, it's an insult to people that have dedicated their lives to it. So I don't want to talk about it too much. I'm going to do my part. Being in New York, it means doing things that might not necessarily be something I really want to do, but it is what it is. Like, if my neighbor has to do it, I'm going to do it. I don't want to insult my neighbor, right? If it's helping people, you know, I don't want to expose people if I'm accidentally exposing them, even if I am, you know, I'm talking about wearing the mask, even if I am, you know, of sound body and mind. I don't know enough about it to say that I can refute it. So just rolling with it. Silver futures. And then we'll wrap it up, guys. I think we're going to wrap it up. Soybean. Yeah, you know, silver futures, silver, gold. I think you, if you read the Citibank memo, the expectation is that all of these rise over the next few years, including gold, and silver likely to, you know, be the higher beta of those two, right? So a very, very fast response with silver going back to the beginning of 2020, but the beginning of this year. But right now, I think that silver is the more speculative play. Gold is the store of value, obviously, or what is seen as the store of value. I think you could absolutely see a BTC all-time high before 2021. I get that. I think you could see one next week, right? At this rate, there's no, you know, those calls of saying like, I do them for fun. So when I say I think we could see a new Bitcoin all-time high by the end of November, it's like, it's a guess. You know, higher time frame calls, they're not impressive at all. It's how people on Twitter actually bait people into getting impressed, though, because they'll say, let's just break this down. They'll say, you know, they'll make a prediction now, and they'll draw something that looks like this. And it'll be up here in a year from now or 6 months from now, right? And price might do something in the meantime that does something like this. Okay? And that doesn't mean anything that they were able to think that price got relatively close to an area and took a relatively loose pattern to what they wrote. The odds of you being successful at any call is one, built on one. Are you getting the direction of the market right? Yeah, that's not too hard now. So the market is moving up. Okay, where's the market maybe going to have a first level response? There, so I'll make my little resistance there. And then here's a squiggly line. Why? Because the market moves and oscillates on the way to any point, right? So higher time frame calls are kind of useless. You know, you're more likely to know where price is going to be in the next 5 minutes than you are in the next 5 years. Direction-wise, though, specifically direction-wise, you could probably say with a high level of certainty the prices are going to be higher next year. But I don't think... I don't get too involved in whether or not it's going to break the all-time high by this point or that point. I think that it's clear that the wind is at our back now. And I call those clout call options. I did that yesterday or 2 days ago because it costs nothing to make a prediction like that. It doesn't cost you anything. If your prediction doesn't come out right, no one fucking remembers. Excuse me. No one remembers. All right. No one's going to hold you to your random call because in between the time that you made that, you've made 4 different modifications to it. You know, a year from now, you'll see that people are going to be, this is what happens. This is why space is so funny. People are going to be starting, I swear, people who have just started trading, like this year, are going to start groups next year based off of something that they predict relatively loosely. And they're going to pin it to the top of their Twitter profile. And it's going to gain so many likes because they're Nostradamus and they were close. All right, but all you have to do is look at the fact that over time, the market has had a positive secular drift, all right, that is loosely around this line, okay? So if you get it right, you're a genius. It's too funny. So yeah, I think that we could definitely see an all-time high. I think I'm not saying we can't see one by next week. It could be the end of January, right? I think that what we're doing is increasing the probability that we see one in the near future. So it's been fun, guys. I think we're gonna wrap it up, though. I think we're gonna wrap it up. I went over the points I wanted to go over. Yeah. And you know what so look at all this. This is a pain in the ass. So you see all these D's? These are delayed now. And I'm looking yesterday. I'm thinking, why are my trading view indicators not popping up? Why are the tools, why am I not even able to open up another chart? So I think I had mentioned this. It was either a week ago or 2 weeks ago. So I have to go through, so I'm just waiting for things to come back to me before I fix them because I don't remember all the things I'm subscribed to. So that means logging into something and realizing I'm no longer subscribed. So a week or two ago, I went to the gym and I think it was at the gym. I'm pretty sure it was at the gym. And I was getting into my car and I'm taking the things out of my pocket and my wallet was sitting on the top of my keys. I forget now, I don't even need to take my keys out of my pocket. I don't even need my keys, I just need my phone. So I take my wallet out, I take my, I must have had a bottle of something too. It must have been a bottle of like Gatorade or watered down Gatorade if it's me. I'm usually drinking watered down Gatorade. I put it on top of the car and I definitely just drove away without it. So I had to order all new credit cards, which is great because I don't have it with me now. Now I just have this little, I had all these old cards that, not credit cards, but old, I had to order my, 2 new credit cards, my bank card, and I don't really have a lot of credit cards whatsoever, which is phenomenal because I don't have any debt. But I barely use my credit cards, is what I was going to say. But my new license, but all the little cards in between, like, oh, you meet somebody and they hand you their business card, makes your wallet like fat. I call it a dad wallet. But I had to get all these new cards. And because of that, I have to subscribe to all these platforms again with new information. So, an updated card. So I got to do that on TradingView because I can't be having, I don't honestly, it doesn't matter to me that I don't have I have delayed data for, half the shit that you're looking at right there, but I need up-to-date data with the ES. So that is that, guys. We are done. Look forward to the next one that we do, which is going to be on Wednesday. And I hope all of you have a fantastic Monday, whether it's a morning, evening, or night. If you're not a subscriber, make sure you hit the subscribe button. That's it. I'm really enjoying these, and I hope you guys are. And until next time, I think I used to say something like, exercise proper risk management and trade effectively. That was exactly what I said. All right. Take care, guys. It's really cool when you end the stream and then you're able to press the button. So give me 1 sec. All right. See you later.